Like to welcome. Sorry, no, again, so welcome to these breakout rooms that is going to be dedicated to finance and insurance. And first of all, I would like to thank to our distinguished panelists. I will introduce them in a moment, and also to the guest. We are going to talk about the different climate services that have been designed in order to inform risk transfer insurance or similar services or risk disclosure that is mandated by European regulation and the taxonomy. We are having more people too, right? That are going to join us. Yeah, so this is what this is our outline. We will have three really interesting climate services presented by the funders, or CEOs. So first of all, Giovanni Campana is the co-founder of the Climate Charted, which is a startup leveraging data analytics and networks of NatCat, loss prevention, to help household and SMEs to assess, reduce, or transfer the risk. Then we have, and Giovanni is from Italy. Then we have Alan Sterpin, who is the Chief Technical and Scientific Officer on Climatic, a company that is specializing in climate risk analytics for insurance and financial sectors. And finally, we will have Roberto Carnicelli, also from Italy, who is the CEO of Aeolian, a startup using satellite data and machine learning to quantify climate events, probability and impact across the whole Europe. And then those of you who already attended the morning session, you know that Simone, who will be our last speaker, is from CMCC, and he will be covering the framework for assessing the climate uh, uh, the value proposition of climate services. So, guys, thank you very much for being here. We will have 60 minutes, 60 minutes for in-depth discussion and also brainstorming about what how your services complement one another or what is needed at the European level and what we can do in the Climate Europe 2 or in the follow-up projects in order to make those services more transparent, useful, usable, and used. So the structure would be as follows. So I would give each panelist 7 to 10 minute time to introduce the service, right? You might use slide, you might talk without slide, but we are keen to learn about how your services look like and for whom they have been developed and what are your experiences in delivering those. And then we are welcoming questions from the audience and, of course, also from your fellow service purveyors. And then we will engage in a discussion on those services. And then we will give the floor to Simone for showing the framework and how it might be useful for you and other services. And we would love to get your feedback on that. So unless there are some questions on the session, I would invite Giovanni to introduce the climate charted.
Hi everyone, morning. I hope you can all hear me well.
We can hear you very well, yeah.
Thank you, first of all, Yaro, for the invitation for having us this morning, and thank you to all the Climate Europe 2 team for organizing the festival. My name is Giovanni Campana. I am the co-founder of Climate Charted. Our tagline, our key point is be the climate resilient partner, as Yana anticipated, of SMEs and households. And I want to be quite precise about what that means for us, because it really defines where we sit in the broader ecosystem of climate services that is also represented here in this call today. So we are not a primarily climate risk analytics company. We do not sell any climate data, any be it hazard data or risk data. There are excellent players also in this call that do that. we are a bit downstream compared to those players. We focused on the step after. So we go downstream from climate analytics. We turn that data into concrete action. It basically the question that we try to answer with our services that I will illustrate in a bit is not how exposed are you, but what do you do about it at what cost? And how does it change your risk profile, which impacts your insurability and your bankability? So we try to, again, address the problem of bankability and insurability. So it's not just that people in high risk areas all over Europe are not insured. Increasingly, insurers do not really want to insure them at all or at premiums that are unaffordable. We see this, of course, all over the US, from Florida to California, but it's also happening in Europe. Insurers are withdrawing from flood-prone areas, and NatCat premiums in specific areas are spiraling out of reach. And this in turn triggers a systemic effect. When insurance becomes unavailable or very pricey, banks in turn will not grant long-term mortgages in those areas because the collateral, of course, is unprotected in a 30-year time horizon. So you end up with basically whole communities that are financially underserved because of climate risk. So what we try to do is to bring back the concept of risk reduction before insurability, to ensure insurability. So basically, we try to convey the message that physical adaptation and risk transfer are two sides of the same solution. The right combination of prevention measures can bring a high risk property back into an insurable range at a premium that the owner can afford. This makes, of course, the risk insurable, and then, of course, it can be bankable. How do we do that? We do it mainly with our key product, which is ScudoCat, Shield for Natural Catastrophe, which is built around this logic of physical and adaptation and insurability. It's not just a risk assessment tool, it's a full adaptation journey for households and SMEs that cover 5 NatCat perils. It starts with a geolocalized risk assessment, which is just the entry point for us. Then ScudoCat helps the client throughout the entire process, which is basically identifying the right partners, for example, certified installers or engineers who carry out the adaptation works on the site. Then we monitor and certify the quality of those works. This certification, of course, is used then for insurance for lending purposes. On the other side of Climate Chartered, we also provide some advisory services for financial institutions. So, for example, we help insurers price adaptation measures at asset level when, of course, developing NatCat policies, and we also support banks with commercial offering with reference to climate change adaptation. So in this context, in the context of this festival, as I was saying at the beginning, we are users of climate services. We consume hazard data and risk models mainly produced by others or publicly available, and then we transform that information into actionable outputs for households and SMEs.
Brilliant. Thank you very much, Giovanni. That was really nice. And if I can very quick follow-up action. We met at the IOPA workshop last year, where IOPA is the European regulator for insurance and pension funds, and basically all speakers have been there, or all their company have been represented at that meeting, and that was exactly where the regulator encouraged the climate service providers to look into and showcase and develop solution to incentivize the risk reduction. Risk reduction as a means for combating the losing financial protection gap. So, Giovanni, if I may ask, yeah, very quickly. So, how do you see, the user side? Are they keen on? Do they have the opportunities to bring their individual risk reduction into their insurance policies, or the? So, how do you, well, what do you see in terms of the demand for this type of services, and where do you see the opportunities, perhaps?
Right. So when it comes to our final users, so be it SMEs and households, when it comes to insurance and risk perception, it's really a lot about awareness and conveying the right message. So what does it mean to be at risk for a SME or a household? You cannot convey nat cat risk the same way to, of course, insurers, or insurers or banks the same way you convey to your household. So what we try to do at Climate Charted within our product School Account is to uh, calibrate the message in a way that again um, creates awareness without scaring of course, the final users. And we try to do it again by selecting very few uh, pieces of information, which is, for example, what we say is the um, maximum probable loss given the 5 perils that we assess over the 30-year time horizon. And we try to again give practical example of what a flood loss might look like for a SME with practical example. Then what we provide is historical data. So we tell SMEs and households, in your area there were 10, 15 hailstorms in the past 10 years, for example. And this also conveys a sense of urgency without necessarily scaring. So it is a lot about, again, getting the right message. And the second thing is conveying that assessment through, let's say, trusted partners, to the trusted partners. So what we're trying to do now is what we are actually doing now is conveying our free of charge assessment and adaptation journey through banks. So we are partnering with commercial banks in Italy. That again, we developed targeted campaigns for a household or SME, and again, it will depend on the bank, and specific clients in high-risk areas, for example, will receive an email or a notification on the mobile banking app with opportunity again to assess the risk and of course get connected to the best partners to reduce that risk. And this is in turn a very important tool for banks to offer an additional service to the clients, but also to monetize on that, because after the assessment or after the additional measures put in place, again, the bank can, for example, finance those works, or they can offer an insurance policy. So it's again a win-win situation. So we convey our platform through our trusted partners, and they also monetize it with their financial products.
Fantastic. Thank you very much, Giovanni. May I now invite Alan? Alan, would you like to introduce your climatic solutions and service? Over to you, and thank you for being with us.
Thank you. Thank you. Hello. So, first of all, congratulate you on this festival, organize this festival. And it's my pleasure to be here today and look forward to further discussion. So, I'm Alan. I'm co-founder and chief scientific and technical officer at Climatic. Climatic is tool platform that combine different climate models, satellite information, historical data, machine learning process to create climate risk assessment for the future. So my work is focused on translating scientific data, climate data, and historical data into actionable financial risk metrics, supporting different use cases like financial institution, insurance, banks, but also other companies, especially from for ESG purpose. So, Yaroslav, is it possible to share my screen?
Absolutely. Yep.
Yeah. Okay.
It,
So I would like to share you our solution, and then I will quick you a quick introduction how it works. So thank you. Can you see my screen?
it's coming. Yeah. Yeah. Now we can see it.
Okay, thank you. So here you can see our application Climatic. So I will go through the app by entering one asset. So for this demonstration, I will enter one asset in your place. So I found that via Marco Biagi, it's a CMCC address.
Yeah, in Lecce, right. That's our headquarter.
I've in yeah. Okay. So okay, so that this is your place here. Please correct me if is not Yaroslav. Sorry, I.
Y- Yeah, it's the building on the left side from your landmark sign, right? That one, right? This is our
Okay.
headquarter.
Thank you. So how all this works? So it's important to choose the to select the exact location because the satellite information that we have in the background are in resolution up to 10 meters. For some countries, up to 1 meter. And for this reason, it's very important to know the exact address or geolocation. That was the first step. The second step is to choose asset type. I will select the commercial purpose for your building. Then we have a lot of additional information that we can enter here. For example, asset height above ground. But so this is important, especially for the flooding, because if you have the basement, you can put -3 or -4 meters. That can change some risk score calculation. But for now, for this demonstration, I will skip this part. And now, what happened in the background? So we are getting a lot of data from climate models from different European climate centers. We are getting more than 30 parameters from satellite information, satellite data, historical data from CIRA, ERA5, reanalysis, and a lot of additional information. We combine all this algorithm, and through 10 seconds, the calculation will be done. Okay, so here we are. We have you have possibility to choose our customer have possibility to choose any time period between 1991 and 2100. So you can choose any time period within that range, or you can choose exact 1 year. If you have, we have data for two climate scenarios, 4.5, 8.5. Insurance likes this 8.5 scenario very often. And here on the right side, you can check the climatic risk legend. So we have data for each peril between zero, where zero means low risk or no risk, and 100, which means extreme high possible risk. And now here on the left side, you can check the scores for 12 different peril. So we have drought and heat wave in very high risk, severe wind in high risk, heavy precipitation, earthquake in medium risk, and then hail, wildfire, late frost, coastal flood, river flood, tropical cyclone, and landslide in low level risk. So these data are connected with for chosen time period for chosen climate scenario. On the right side, you can check the evolution of climate risk year by year. So all this is possible thanks to climate models and a lot of climate indices that we are using in the background. For example, I can show you for heat wave, we are using summer days, tropical nights, and heat index information. and we combine this data with some other calculation to create the risk scores. Important also information is building adaptation solutions for each peril who is in medium or high risk. We have the list of recommended measures that users can do to reduce that risk. And each measure has information about effectiveness, cost, and complexity. So this is some kind of dynamical measures. And this is very useful for insurance companies and especially also for banks for ESG purpose. So we have a few banks and few insurance companies that are using Climatic, some of them using web application, some of them using our API, because all this data that you can see here, it's also available through API access. So later I will explain a little bit more about one of our biggest use case in insurance sector that will be, I'm sure, very interesting for all of us. And of course, we have a lot of different possibilities here. For example, export to Excel, export to PDF report. All this can be done very, very fast. And also we have possibility to create a portfolio. And for the end, the coverage that we are, the countries and the continents that we are covered are currently Europe and North America. So this is the part that we operate right now. And of course, for the end, I would like to say that we are right now in developing on financial metrics like PML, AAL, haircut, climate value at risk, SCRs, and other, because we need we see a very high need for this information, especially from financial organization. Okay, so that was a quick introduction from my side, and let me know if you have some question, or we can continue our
It's lovely,
discussion.
Alan. Thank you very much, and congratulations for very interesting service, right? And if you want, you can send us the fact sheet on our headquarter. I will share that with our administration, and perhaps we can buy that risk profile as well from your service. Thank you very much for the practical demonstration. I would first give the floor to third panelist, and that's Roberto. Roberto from Aeolian to introduce the service before we go into more questions and elaborate on the synergies or complementaries. Roberto, over to you.
Okay, so hello everyone, and thank you for the invitation. So as Giovanni and Alan has already introduced, there's a big topic on climate risk. It's an evolving discussion. So in Aeolian, we funded the company with the goal of developing a solution that was leveraging two emerging technologies at the time. There were satellite data and AI, with the goal of building proprietary models that were more accurate with respect to what was on the market. Because we saw that insurance companies were losing around 50% on NatCat policies. So this means that they were expecting a certain amount of losses, like 100, and they were actually losing 200 on average. So there was a huge protection gap also due to this unprofitability of the market. And this was mainly due to the inability to model correctly these kind of events. So the goal was to do exactly this. And in the Aeolian, we developed a solution which is called IRIS that quantify the probability, the intensity, and the impact of those events, of those extreme events all around the European continent. And so I can also show you like a very brief demo on how this looks like in practice.
Yeah, you are very welcome to do so. Yeah.
Awesome. So let me share the screen. Let me know if you can see correctly.
It's coming. Now it's, yeah, we can see it.
Okay, awesome. So let me put this in English so that is, yeah. Okay, so our platform is built to quantify risks of complex assets. So not just um, real estate, but also electricity grid, gas pipeline, optic fibers, and everything that is a critical infrastructure for the country. We work a lot with critical infrastructure players. And what does this platform allows you to do? Very similar to what Alan showed you, there are many risks, okay, like flood, wildfire, landslide, droughts, extreme rainfalls. In this portfolio, we also have extreme wind, heat waves, and so on. We can choose different time horizons. We can choose different climate scenarios. But I want to show you what is the real value added of this solution. And I'm going to show you, for example, the level of details that we can achieve on a single asset to understand what is going to happen and the damage that those events will cause. This, for example, we are looking at electricity substation. So just to give you an idea, these are the substation that transform the electricity from high tension to low tension voltages. And we're looking at, for example, flood risk. Okay, this analysis can be done for all the other pairs that I showed you. What we can do is, for example, here we are between two mountains, as you can see. So we are on very close to the river, on two mountains, and you can see this river with this very tiny piece of water here. And we were trying to understand what can happen there, right? So we can simulate, for example, the flood, understanding where water will arrive in different probability scenarios, and understanding so which area would be flooded and which will not. And of course, simulate this for different climate scenarios, for different time horizon, and understand not only the meters of water that will arrive in a specific point, but we could also we are also able to understand, of course, the trends over time and the damage that the asset will incur. So both in terms of direct damage on the value of the building, but also the probability that the asset, in this case is electricity asset, will stop working. Which of course, if we talk about critical infrastructure, is very important because I was in Barcelona when the blackout happened last year. I don't know how many of you remember. And you really understand how dependent we are on electricity, right? So I'm a classical young man with no cash in my pocket. So with no electricity, I couldn't buy anything, not even a beer to wait. So when this kind of extreme events happen, we not only need to think about the direct impacts on the damages that household will have, but also on the interruption of key services like electricity, railway, highway, that of course will impact even more the population that are affected in a specific town or of region. So this is what we do. We model this kind of events. We try to understand what will happen, the strength, the impact, and the business interruption that the key assets, key critical infrastructure asset will incur. So yeah, this very briefly. I just wanted to add also a few words about my perception on where the market is going. What we saw is that, for example, in Italy, this year entered into force the compulsory NatCat for NatCat policies for companies, and the result is that over 4 million company that should activate an NatCat policy, only 600,000 has actually activated it. So even if it is compulsory, there is a huge resistance to insurance protection on these events. And this is mainly due to a cultural lack of perception that extreme events are a risk. When those events happen, we have usually 2 weeks of awareness where everybody talks about it. Then the discussion drops down. People decrease their perception of the risk and do not go to ask for an insurance. So this is a cultural issue. It's big. And so to answer to your first question, when you said, okay, what can the public do, to support this? I think the first one is awareness. So do a lot of education on what is a climate event, why it is not more a rare event, right? We talk about extreme events. Probably we should change the wording. It's not more an extreme event. It's a normal event, unfortunately. Why is it normal? Why we should talk about it? And what can we do to protect ourselves? And everybody can do it in their small area of expertise something. Of course, financial institutions are key players in this game. Banks, on financing this kind of intervention to build adaptation measure, insurance to actually protect it with financial product. So we really need to work on this direction and also to push corporation in integrating in this risk management system climate events. It's something that is already ongoing in some sector, but not in all of them. I think this will be a very big step forward to increase awareness, start to talk about the topic, start to boost innovation in this sphere and finding new solution in this area.
Yeah, fantastic, fantastic, Roberto. Yeah, I would slightly disagree on that. You know, it's all everything is put down on the perception, but I think there is much more institutional responsibility for creating the situation of compensating the risk, but also urban planning opening up for buildings that should not be built in those places in the first place. But I really appreciate your thoughts about that what is needed. Brilliant. Thank you very much, guys. That has been a very nice overview about what is out there or what you are providing. And now I would like to delve into a little bit about where you see the potential to include the standardization, or we have heard from the presentation of Marina that the products like yours, there are many and they are not comparable, and they are somehow fragmented, and the practice is different for. So it's appealing what you're doing, but where do you think and how it would help you? Where do you think we can do a better cross comparison? I was thinking to start, yeah, with Alan. So what? How do you think that um, how we can respond by the services like yours, like Climatic, to address the challenges of providing better data, but in a way that is transparent, comparable, and aligned with what the user are expecting. So where do you see the potential of reducing or perhaps aligning the variety of climate services towards providing a output that are transparent and comparable? Alan, can I
Yes,
give
yes,
you the
yes.
floor?
Yeah, thank you. So, good question. So, first of all, what is important for all of us, for all climate risk tools that we developing, it's the kind of standards that should primarily be to increase trust in such solutions. So, Climatic is part or in UN climate risk tool dashboard since 2022. So, this UN environmental program is, as I know, only one institution on the global level that compares and that made a list of climate risk tools that exist for Europe, North America, and other part of the world. So I think that some kind of framework will be very helpful for us. But this framework must be simple and lightweight to avoid slowing down the innovation and technological progress, of course. And because today we have a lot of some kind, yes, of AI revolution, and this revolution will create a lot of new models, AI models, a lot of new product and technologies, and this is very important to make this trust for insurance companies between us and their interest.
Fantastic, Ella, brilliant. Then perhaps I would ask Giovanni. Giovanni, what if there are a number of interesting new financial services, right? And you might elaborate about what kind of trend do you see in bringing them to the market. But before or before those services reach the market, so what would be wise to do in order to open up a new generation of similar services that are transparent and at least partly standardized?
All right. So this is a quite complex question, because with Alan and with Roberto, we've seen a lot of different uses of climate data and climate services. So we really need to be on the same page on what kind of climate service we want to standardize or regulate. When it comes to insurance, as everyone knows, I think we also talked about it in the plenary. When it comes to actual NatCat models, they are pretty much standardized. So there's a couple of vendors, a bunch of vendors throughout Europe or throughout just in general across the globe that develop those kind of models, and insurers have been using them for decades. However, when it comes to other climate data that's not necessarily used for insurance or maybe used in the future for insurance, again, as you said at the beginning, there's a lot of different approaches, underlying assumptions, and as Alan said, there's going to be a further proliferation of approaches going forward. In this matter, I would like to highlight an initiative that has been undertaken by the European Commission. I don't know if you noticed over the past months, basically since late 2025 and then recently in early 2026, the European Commission is putting forward a European climate resilience framework, which is a whole, let's say, package of initiatives which will crystallize into law, into EU regulation or directives or whatever it will be. And part of this EU climate resilience framework will be directed at standardizing climate risk assessment. Of course, this will take time because we'll have a proposal, I think, by the end of the year. However, again, also the EU Commission started working on this. So what scenarios should we look at? What kind of assumptions and that kind of stuff. So I do believe that some sort of standardization or classification is necessary. However, at the same time, leaving room to also providers to work within those boundaries and showcase their peculiarities. For example, Roberto and Alan might have different approaches, but with the same, let's say, assumption. So again, we do believe that some sort of standardization is very, very useful. However, again, leaving room to different providers to, again, to showcase what they do best. But again, we do think that this specific legislative train of the climate resilience framework will be quite useful. Since we work a lot with insurers and banks, this kind of stuff, again, when it enters EU law, it tends to be heard. So we are quite optimistic about this. But again, the proliferation of different approaches we are seeing now, I think, also is an obstacle, is a challenge to adaptation. So we do not have a specific standard or a specific, say, minimum set of minimum ambition, let's say, for adaptation that we all share. And so when the EU would tell us, okay, the goal for the EU is to assess risk at this specific scenario, these specific risks with these assumptions, then we also have an ambition level that we will be able to target. And then I think, again, also investments in adaptation will be more ruly, and we'll have some private investment as well.
Yeah, fantastic. Fantastic, Giovanni. That was really nice. Thank you also for bringing into the discussion the European climate risk management and resilience framework that used to be called Climate Adaptation Plan. It was initially put forward in the declaration of the political priorities of the new European Commission. So that's well spotted. For those who are less familiar with that, Giovanni was alluding to the recommendation to include a consistent climate scenarios, but perhaps not only, also risk and resilience scenarios, harmonize those and for the use across the risk assessment from regional to this European scale, but also for the climate services. So that's very interesting topic. So that's absolutely critically important for us to, when you are providing information about certain type of climate towards which we are going to, that the scenarios that you are using are comparable so that we can directly compare the result. That would be fantastic. Absolutely. Excellent. So may I turn to Roberta? Roberta, what is your take on this type of problems? So how do we what is, in your view, the role of standards or quality framework in order to increase the credibility, usability, or the diffusion, uptake of climate services in insurance?
Yeah, on this, I think it's a very delicate topic. As Giovanni said, for sure, giving a completed white paper, to everyone that can do whatever they want, and there is no way to check the quality of the work, it's dangerous. On the other side, regulating, it's also has the opposite effect. The risk is that they have the opposite effect, meaning that they standardize results, they eliminate innovation, and they bring provider to become compliance solution provider, which means the perceived value of the output decrease. If an output is standardized automatically, what can Aeolian give me more than climatic, for example, or vice versa, right? It's very difficult. It's very difficult because it will be standard. You will need to provide certain peril. It will be calculated in a certain way. So everybody will become exactly the same. So we will become just compliance provider, and this will become a price war, right? So automatically, provider will find the cheapest way to do a standardized output. So the quality of the output will probably not be the best possible on the market. It will just be a price war on the cheapest solution on the market. So this is the extreme risk on the opposite side. So the risk of not regulating is that everybody do whatever they want, and the risk is that the quality of the output is very low because there is no minimum quality standard. The opposite result is no quality at all, just standardized output and price war on the solution. And so disincentivizing innovation in terms of higher quality. So this is the two extreme. We need to find the good balance between the two. So we need to find a good balance of, okay, do we have to have a bare minimum of quality, but we can go above that. We can be creative in finding new way of modeling climate events and in finding new way to calculate this stuff. So I think this is my personal opinion. And also, I think specifically now we are living in a moment where we find this disruptive innovation of, for example, generative AI in some sector, in some segments. The good things about this is that we know that they increase efficiency. The bad thing is that it's very difficult to understand how the model works, right? So it's a black box. So it opened up the discussion about transparency. Now, if we transfer this issue on climate modeling, we have the same issue. So sometimes great innovations and using new models create black box output and increase the issues of transparency. So what is the right balance between transparency in knowing exactly how the model works, and in knowing why in a certain position the water height in case of flood will be 2 meters instead of 2.5 meters. On the other side, however, we need to test, right, new models. We need to at the end, our goal is to build resilience, right? So the ultimate goal should be to have the most accurate model possible on the market, to allocate in the most efficient way in investment in the market. So when we talk about regulation, transparency is always an issue, which of course makes sense from the customer point of view, but again, it can deteriorate the possibility of use new models, new technologies that have no transparency, but possibly can increase dramatically the capability of forecasting those kind of events. So, we are also seeing in Europe now a wave of deregulation, right? In the last few months, not on this topic, but on other topic, the European Commission has started to say, okay, probably we have over-regulated some markets, so we are deregulating to boost growth and innovation and makes Europe a more competitive continent. I think we need to find the same reasoning here. We need to find the right balance. Okay, no regulation is bad, over-regulation is bad. We need to find the right balance. So it's a really delicate discussion that we need to have on this, and involving the private providers, as Climate Europe 2 is doing on this topic on regulation of climate risk. It's fundamental because we need to have a discussion on who using the service, who's developing the service, and the regulators. And the only way is to put all the three on the table and exchange ideas and find the good balance that benefits all of the three.
Fantastic. Thank you, Roberto. I think you were referring to the omnibus package that was amending the sustainability reporting. Yeah, so European Commission is lowering down the requirements a little bit on the companies on how they are exposed to risk or what risk they might produce for the nature and so on. So that's interesting. Thank you very much for those. So, guys, all three of you, right? So you said regulation is good, or standardization is good. Regulation of the market is good to a certain extent, but leave the flexibility. And I think that's a common bottom line, right, of our discussion. But now, when we think of the standardization, so there are different ways how you do that, right? So on the one hand, you might make more explicit the requirements on the companies when they are disclosing risk, or the insurers when they are underwriting the risk. You might make the explicit requirements, right? Transparent, saying, but this needs to be built on this quality assurance and this way, without standardizing the climate services. Or you might intervene on the supply side and the services, but without specifying how the companies should report, or lowering that burden on that. So there are different ways how to intervene, and I would love to hear your opinion about where do you think is the best way, right, of going and intervening, and in what form, right? If you have any thought on that, that would be lovely to hear. Oh, right. Perhaps my question was a little bit too complex, right? No problem. So there are interesting ways how European Commission has funded the mission adaptation, for example. Mission adaptation is providing a lot of open source, open access data for climate risk assessment, encouraging these at the local and the regional level. Of course, those tools are capacity enhancement process in the first place. They are not services in that sense, but they are expected to boost the understanding of risk across your potential clients, and might be used by the private sectors as well. But those tools have a specific purpose, right? And the purpose is not just one. The risk assessment, and I think you said that, Roberto, the risk assessment might inform strategic planning, and then you just need not necessarily the asset level resolution of the climate models. And then you need critical infrastructure assessment and risk and so on. Then you really need the high resolution and so on. So the climate services, as you are providing, are responding to different potential uses and potential needs. Of course, we cannot standardize them and bring them on the same level, because it would be too costly for those that do not need this resolution, and insufficiently resolved, especially, or for those that really need that requirements. So the market will somehow satisfy the different purposes. And now the standardization should not set the level, because those purposes are different. So the standardization might intervene on how the risk information is produced, or for those that need that information and report on that information, how they are disclosing how they have got it. So if you would have some experience from addressing the different purposes of risk assessment in your area of operation, or the users that come up with some specific requirements that are challenging your models. That would be fantastic if you would could elaborate or share with us. So what is this feedback from the users?
I don't know if you, Alan,
Yeah,
want to start.
please.
Otherwise, I can start.
Yeah, please.
Okay. So we when we funded the Eolian at the beginning, we were targeting vertically just financial institution, right? So the need were we really need to make a difference between banks and insurance because the type of information that they need is already different. In case of banks, the main driver is regulatory. So according to the European Central Bank's Pillar 3 requirements, banks need to disclose climate risk on the credit portfolio. So this means that they need to say, on my credit portfolio overall, what is the exposure to the main climate events? And in that case, the level of detail that you need is not that high, right? So the big players in the market that maybe were already providing to banks other type of risk data like credit risk, default risk, and so on, decided to provide also climate risk. We just indexes like from 0 to 10, from 0 to 100. And these at the beginning were enough because for banks were like, okay, I have regulation, I need to move very fast. I need to find very fast a solution that gives me the information that I need to check the box and say that I did it. When we showed our solution at the beginning to banks, they said, okay, but this is too much for me, right? I don't even know how to read this data. It's too much, right? Because again, quality also is a reflection of price, right? The more you want
Exactly.
to pay. So they say, okay, for me, this is too much. When we went to insurances, instead, the need is different. The need for insurance is, okay, I need to price, right, my premium. I need to know if I want to sell this product to these clients or not. So the type of information they need is mainly some variable like the average annual loss or the expected annual damage or the aggregate probability or so on. Why? Because they need to insert your information within a process that is already standard for our solution. So I have a specific need in terms of which kind of variable you need to provide me in order to have an operation flow that makes sense. In that case, resolution also, it's an issue, meaning that they need too much resolution. Why? Because the base concept of insurance is on mutuality. So I take a pool in my portfolio. Some of them have high risk, some of them have low risk. Overall, my portfolio at which risk it is, and I price my clients on a mutuality system in which they share the risk overall, and I need to know the overall price. So in that case, a too high risk solution also is dangerous because they are not able to use this kind of information. To make an example, a specific example, if I am used to price car insurance, right? I have an average by town, by sex, by age, by and so on. So they have cluster of customer, but that cluster is priced like that. I don't have a price for Roberto. I have a
Yes.
price for a male that live in Turin that have between 20 and 30 years old. Now I have more than 30, but anyway. And this is the way I price. So if I give you the risk of Roberto, you will not be able to use this information because it's too much. And the same is for climate risk. If I tell you what is the risk of that house, it's too much. You need to have the risk probably of the town on average. When we went to infrastructure, the need was completely different because infrastructure said, okay, I have a power plant there. I need to know if I have to invest $100 million to make a resilient system to protect the power plants. So I want to know exactly where the water will arrive. will arrive just in the first part of the building or will arrive in the second part of the building. So the type of information you need is extremely high resolution, and the terms of impact is different. You don't really care about the direct damage of the asset. You need to know if the asset will stop working because you are fined if you do not provide electricity. So different clients have different needs, in terms of resolution, in terms of variable, in terms of definition of impact, and so on. So that's why it's very complex. And for example, in the Eolian case, we decided to shift and to leave apart the financial institution and to focus on infrastructure because they really needed high quality data. So quality is the main decision driver. And so we decided to go there. But there are many different. If we go to agricultural producer, the need is even different. I need to know if my wine production will be reduced next year due to the extreme temperature, for example. So as you change customer, the needs change, and you cannot have a one solution fit all idea. So yeah, this is
Brilliant.
my take.
Yeah, brilliant. Absolutely. And that's the point where the standardization comes in, right, Alicia? Because the standardization would affect all the climate services at once, although they're targeting different niches and so on. Alan
Mhm.
and Giovanni, would you have a additional thought on that and experience to
Yeah.
share?
Yes, so I agree with Roberto. We have a really very similar experience from market. So I will give you a few examples that we did in the past. So first of all, the very high resolution, for example, up to 10 meters because of satellite data, is most important for insurers. Because one example that we have, so one big insurance companies, including our information through API into their online system for insure your house. So they're using our calculation for core pricing engine. So if you want to insure your house, you enter in their platform your address and other parameters, and then you will get the price, the policy that depending on the climate risk calculation. And insurance usually likes to do a lot of testing. So Roberto mentioned before that we have a lot of AI information. This is some kind of black box models, but you have the inputs and outputs from this black box that you can verify. And insurance companies usually do a lot of verification, a lot of testing. Often they send us 100 of address. We calculate climate scores, climate risk for that address, and then they are doing internally verification between our scores and they expedition. For the banks, in the first row, for banks part is important regulatory reporting, ESG. So this is also connected with that. And like Roberto mentioned before, for example, for power plant, for windmills. So we have one situation. They want a very high resolution, precise information about wind speed and wind gust in the future. So they really need a very precise local modeling information, local modeling data for their use case. In the other hand, we have a lot of use cases with companies for ESG purpose. And in the first row, the important information for them are adaptation measures. This is most important for them instead the, for example, if the resolution 10 meters or 100 meters. So it's a very different use cases. So I would like to say that we have three pillars: insurers, banks, and ESG purpose. So this is some kind of that came from our experience from market.
Fantastic. Thank you very much, Alan. And Giovanni, would you have like your experiences from similar experiences matching your peers?
Yeah, absolutely. Thank you, Hero. So again, as I stated earlier, we're a bit different from climatic and Aeolian, so we do not provide climate analytics per se, so we do not sell that kind of service. However, I mean, we agree with what was said earlier, especially Roberto, about the concept of mutuality, that theoretically, of course, insurers will have a big enough pool of insured with different levels of risk, and then of course, they can price an acceptable level of with reference to different coverages. However, at the current uh, level of insurance penetration, especially in Southern Europe, insurers tend to use that data more about, maybe it's more for like portfolio planning and strategy. So they don't want to get the bad risk in that portfolio. So in one sense, they use it, but because of this low penetration of insurance that Roberto mentioned at the beginning. So at this point, it is also, I mean, in terms of resolution and precision of data, and we see insurers use, again, high resolution data for, again, portfolio steering or in general strategy setting. So this is with reference to the, say, hazard data that we've talked about. Another point that I would like to stress is about exposure data. So Alan and Roberto focus a lot on the hazard part with reference to, I think, insurers and banks in general, but also us as users of climate data. We do think there's a lot of room in developing more precise exposure data, and so be it the yield build of a specific real estate asset, the type of construction, the presence of specific components on the roof, for example, your PV panel, the type of roof, the age of the roof, this kind of stuff. So we talk again a lot about hazard, but we do think that when we talk about climate service, we also have to talk a lot about exposure data, vulnerability data, and there's a lot of need in terms of vulnerability data from external providers. And yeah, this is something I think that climate service providers, such Climatic and Aeolian, can, I think, perhaps in the, again, financial sector can also provide, because again, also this will impact your solvency capital requirement for insurers. So if you have a portfolio that is very old or unprotected and you're exposed, it is exposed to whatever peril, I mean, this might impact your capital requirements. So again, the more precise data you get on exposure, the better you can also calculate your capital requirements. So this is just another topic that I think will be useful to discuss going forward, Jaroslav, in the standardization, right? So it's not just the hazard.
Thank you very much for that, Giovanni. Indeed, right. So what you are hinting towards is the data infrastructure, and when there is a advanced standardization on the services side, we also need something on the data side, and how the data is collected or made openly accessible, described, and reused if this is a public sector. Thank you very much, guys. It has been a really insightful discussion, very rich in content, and very very useful also for our audiences. I would now suggest that we move to the presentation of Simona, and Simona will share with us a outlook on how we are looking at the value proposition of the climate services, and especially how we might split the assessment or address the assessment in meaningful beta work, all right, and frameworks that we are following. So Simona, over to you, and we are looking forward to hearing what you have prepared.
Thank you very much. Can you hear me?
We do.
Okay, Perfect. Thank you very much, Yaro, and also the speakers for these interesting insights from the sector of financial insurance ones. So today we are gonna navigate like through some advancements and achievements that we have done in climate services, and then we propose the object of this presentation will be a proposed framework for climate services. So the goal is to propose like a step-by-step framework for climate services, and then maybe to refine it through feedbacks from the audience, from also including the service providers, providers, and other relevant stakeholders. And so in this way, let's say that like the framework is presented not as like a fixed model, but like as a practical and evolving structure that can be improved through dialogue or experience. So let's start from the conceptual notes of the framework for climate services. So what we really do mean for that. Basically, a framework for climate services is a structured approach for producing, delivering, and evaluating climate information so that it supports real user decision. So its relevance has grown significantly in recent years as climate change increases like the frequencies and intensity of risks affecting such sectors that we talk in this parallel session. So it's like, for example, finance and insurance. So in this context, decision makers also like need not only scientific information, but also services that translate climate knowledge into practical, usable, and context-specific guidance. So a framework that is really important because like it's help organize the full process through which climate data are transformed into decision support. So from information production and user engagement to service delivery and impact evaluation. So we saw that there are like a lot of dimensions that go through within like this kind of framework. So why we need like a more specific integrated framework? So this is like one central question that we are also like trying to reach in our work at CMCC and within like Climate Europe 2 project. So the uploaded like literature identify like several persistent like weakness that justify a more specific framework. The first one is related that like many services like are still like too dependent for like supply driven. So they start from available data or modeling capability rather than like a form like a clearly defined user problem. The second, like users' goals and then like decisions are often like not too much precisely enough like to support robust like evaluation. Also, we have like other like elements. For example, climate service value is often assessed too narrowly, for example, through like a single economic metric, even like through social, environmental, and for example, institutional benefits may be also like another channels that are considered equally important. There are also the service development and the valuation are way like too often separated. So even through recent work show that like evaluation works best when it is like designed into the services from the beginning. And we documented like the last two critics, for example, that like many projects don't document uncertainty, so assumption, also like they don't employ like user engagement or evidence like that robust, that corroborate enough like to enable like a comparison like across like different cases. And then lastly, the goal of of our work is like just in terms of standardization. So the efforts remain difficult because like climate services need some harmonization, but cannot like reduce to a one size fits all model. So understanding a framework for climate services also like will require considering how value is generated like across all the value chain. So like since like the framework helps explain how climate information can eventually lead like to a meaningful benefits for users. So from like this graph, like we saw that like the values generated through like a chain rather than like a single product. So what arose is that like climate information yet like a climate services until is interpreted like is tailored and applied through a user-oriented like process. So this is inside is really central because it shifts like attention from the production of information to the production of like actionable services. So in practical terms, we saw that like that like for example like the value like through can be blocked at like several like, points. So a service for example might fail because the forecast is weak, or maybe because like users were not like correctly identified, or because like the timing doesn't match decision windows, because uncertainty is like too hard to interpret, or because or perhaps because there is no legal or financial capacity to act. So benefits sometimes like are really not clearly measured, and therefore there will be not like never like feedback into the service improvement. And I just like put a graph that synthesize the also like various ways of value that we can capture, that we can absorb, that also like user could arise, that cannot be only like economic but also social, like environmental, like for example. There was like a work from Lazio that explicitly lists like all the value benefits for climate information in different ways. So moving along, why we, we propose this step framework for climate services, mainly because like it's based on the idea that climate services generate like value through a sequence of connected stage. So we identified almost 6 or 7 like stages, and then now we're gonna go through each step by step in a really clearly way. So the step one is like about defining like the adaptation and the decision context. So it's really like the foundation of the whole evaluation process. So the key idea here is that like we should start from the problem, not from like the data set. So before assessing a climate services, we need to clarify what climate risk or adaptation issue is meant to be addressed. So which decision is like supported is supposed to support, and who is like the responsible for this decision. So these steps requires identifying like a baseline, meaning that what will happen without like the services. So there are like some other like characteristics, for example, core indicators. So some like key evidence and a good practice. So it's really good like to interpret, to define the baseline and the decision context. The next one, the step two, is like to map users, stakeholders, and governance. So step two basically focuses on identifying users, so stakeholders, distinguish clearly between direct users, indirect users, intermediaries, providers, and affected groups. So this is important because a climate services is a really used or valued by only one actor, but instead the value is often co-produced through like a wider network. So this means that in practice we need like to have like a user map, a stakeholder map, or like a simple governance diagram that like you guide us like to identify the main final end users. The step three instead is really strictly related to a work that we have done in the work package 3 of Climate Europe 3 is like specify like the climate service value proposition. So the step three is like about really like we describe it like clearly enough the climate. So which this means like really explaining what like actually the service is. So who is like the designed for, what information or inputs it uses. So what it delivers and how and when can like it user. So this really need like a clear explanation of how like the services is expected to influence like decision and generate benefits, and how the value proposition is like really distinguished from the existing one. Another key element is like clearly described the services and delivery mode. This is really important because in this stage, the idea really becomes like a usable service. So the aim is to assess whatever like the format, the language, the timing, the communication channels, and support like mechanisms that are really appropriate for the target users. So this step is not just like about consulting users once, but like it means like really involving them through development in order to make like the service really understandable, accessible, and also relevant to their like workflow. So this means really defining how the service will be communicated through like which channels, and what kind of training or support is needed to make sure that the service is not only available but also like usable in decision. So like the one is like the most important steps here is the assessment plan. So what I was like recurring said before is that is to build really a central part of this step is like really careful reflection on the baseline scenario. So including what would possibly happen also without like the service. So in practice, these steps really connects well with the classic benefit cost logic. Okay, so like first we establish like the baseline, then identify the changes like introduced by like the services, and then the expected like benefits and cost, and finally select like the most appropriate analytical approach. So at this stage, it's really important to define indicators, responsibilities, reporting robustness, and uncertainty. So the next step, that one that now we are really delving in Climate Europe 2, is like the evaluation methods performance that will constitute our like step 6. So here, like really the actual evaluation takes place. Okay, so this will consist of combining qualitative and quantitative evidence to assess performance, the uptake, and the value, like in general. So climate services like may be scientifically robust, but still fail if it's not really fully understood, like trusted or used, like in decisions. For these reasons, this evaluation should cover some different like techniques. For example, the climate services benefits can be assessed through different methods. Cost benefit analysis, avoided cost approaches like decision analysis or econometrics models as well. And the last one is like really translate like the findings into really concrete decision making. So in order like to close like the loop, so findings should not end as an evaluation report, but they always like need like to be translated into service like revisions, governance changes, training needed, also like documentation reports, improvements, and recommendation for future standards, let's say, in our work as like Climate Europe too. So recent work really clearly show how like the climate services framework need an explicit like maintenance and evolution phase after the initial implementation. So like because products, governments, arrangements, and users interfaces must keep pace with like new science, okay, so with the new policy demands and changing like stakeholders needs, for example, as we framework delivered by the European Union. And lastly, I will conclude. So, how like this kind of proposed framework will encourage standardization and guidelines. So, the proposed framework for climate services that we aim to display contributes like to standardization in a practical way rather than like a prescriptive way. So it doesn't require that all climate services use the same data sectors or interfaces, or maybe like, but instead it identifies which elements should be harmonized because they are really prerequisites for trust, for comparisons, and also, most importantly, for quality assurance. So, in a kind of sense, this is really aligned with the project Climate Europe 2, which aim like really to support quality assured and equitable climate services through standardization practices. So this framework will also like helps to distinguish standards from guidance, for example, because like standards are really suitable where comparable minimum requirements are needed, but guidance is better when the judgmental and like context tailoring remain essential. And here, like I would like to conclude here and give
Fantastic,
the
Simona. That
next.
was really nice and really rich of the insight from the Climate Europe G. We only have 5 minutes, and I would like to give the floor to panelists, right? In the first place, so very quickly. First of all, one simple question: do you care for assessing the value that your service is generating for the users? So, is it important for your business choices or business innovation? And if so, how do you do that? So, do you have a established practice on something? So, um, and then my second question would be very quickly reflect about from what you have heard. Of course, it's a very complex, but do you think it's interesting for you? We will be organizing a workshop to which you will be invited, of course, among others, and we will try to get the common ground and common principles pinned down and shared by the others. So, where do I start? Alan, would you like to be the first?
Yeah.
Let's say, do you care for the
Yes.
value?
Yes, thank you. Just few sentences. So I like the and support your plan. I think that framework it's needed for in our area that we are working, and of course we would like to support that plan and be a part and help you with standardizing all this information. And also, I'm interested about the expectation of the timeline of your framework. When you will have some kind of the next steps or some kind of draft and final, because as I know, your organization and the UN Environmental Program are the two organizations that are doing that standardization, and this is very need for us, especially for standardize the output for different sectors because we have a lot of questions from insurance, banks, and other sectors about data, and all they want to know our methodology and white paper, how we calculate this information, how we calculate the data, what are the sources of our data. So this is the things that we can that can be put to some framework.
Thank you very much. Giovanni, may I turn to you?
Yeah, again, as I stated earlier, we're a bit different. Again, we are downstream. We are partly users of climate services. Thus, we would really appreciate that kind of process, that kind of evaluation process for climate services. And we do believe, as I said earlier, that a certain kind of quality procedure or standardization procedure is crucial if we want to reach those adaptation targets, um, which are needed. So absolutely on board with that. Again, with at the same time, again, leaving room for to specific providers to showcase the peculiarities. Of course, us internally, we do have some sort of course, evaluation process ourselves, which is again very much tested on the again perception of our households or SMEs that use the platform. So internally, again, it's much more about the final awareness rather than all the meticulous process, of course, that you and Simone defined. However, in terms of users, again, we're 100% supporters of again that process.
Fantastic. Thank you, Giovanni. And Roberto, may I turn to you?
Yeah, I completely agree with Alan and Giovanni. So, as I was saying before the presentation of Simone, which was very interesting, is that the only way to proceed is to involve everyone on the table, on all the different point of view, the users. So ideally, some banks, some insurances, some infrastructure for different use cases, some climate provider like us, and also as Alan said for Climatic, the same I say for Eolia. I'm happy to be involved in the discussion and to bring our point of view. And of course, the regulator, so the European Commission and whoever wants to achieve also higher goal than the pure market quality standard. So, yeah.
Fantastic. Fantastic, guys. Thank you.